Hello everyone, welcome to today's video and this is your friend Bharat Shankar. HDFC was an ordinary bank established in the year 1994 when public sector banks like SBI, Canara Bank and Bank of Baroda and many other banks were already very big and had a very big name and customer base. And the reason for this is very obvious because during those times, people only trusted public sector banks to keep their money and they believed that private sector banks were way more riskier, because of which majority of the people completely avoided private sector banks. And that's why during that time, many people believed that banks like HDFC Bank didn't had any future in the banking sector. But 2 decades later, here we are, where HDFC Bank has become the biggest bank in terms of market capitalization, that too only in 2 decades of its existence. And the stock of HDFC has given more than 29,000% of returns to its investors, which is the highest returns amongst the banking sector stocks. And not just Indian banks, HDFC Bank has given more returns to its investors than the world's largest bank, which is JP Morgan. And now the question comes how HDFC Bank became so big that it managed to surpass even the biggest bank in the world in terms of returns. And also a much bigger question is how HDFC Bank managed to break the monopoly of the Indian public sector banks. And in today's video, we are exactly going to discuss about it in detail. But before we go forward, I'd like to tell you that me and my team, we really work very hard to make such kind of a quality content for you guys. And if you want to appreciate our efforts and hard work, then you can press the like button and like the video and also subscribe to the channel. And most importantly, don't forget to press the bell notification so that you get an immediate update or notification as soon as we upload a new knowledgeable video. So before we deep dive into HDFC's brilliant business strategy, first let's try to understand how a bank in general works and makes money. So banks generally make money by taking money from depositors in their savings account, current account, fixed deposit, and also through some other means of financing like corporate bonds and so on. And on all of this money the bank is receiving, the bank has to pay a certain percentage of interest. Like for example, on savings account, bank pays about 2 to 3% of interest per annum. On current account, there is no interest given to the depositors. And similarly, a fixed deposit or a corporate bond have different interest payout which varies from bank to bank. So now the bank makes money by giving away this same deposited money to borrowers in the form of loans at a higher interest rate. And the interest rate charged depends on the type of loan and the risk associated with the loan. For example, on home loan, the bank might charge 7 to 8% of interest rate. On car loan or vehicle loan, the bank might charge 10 to 11% of interest rate. And similarly, on personal loan, the interest charge might vary from 10% to 24%. And if you go with a simple and straightforward calculation, then a bank's profitability is simply the interest bank earns or charges on the loan it gives to the borrowers minus the interest the bank has to pay to the savings account holders, fixed deposits, corporate bonds and so on. And of course, there are some more associated expenses which the bank has to bear, which we have not included just to make the calculation simpler to understand. So now, after understanding the basics, let's narrow our focus on HDFC Bank and try to understand this bank in more detail. So HDFC Bank was established in August 1994. You would not believe if I tell you that during the initial days, the bank had its back office in a truck yard. Literally a truck yard, where during the day HDFC employees used to work in open with no fans or roof above their head. And at night, guess what? Trucks used to park at the same place because obviously it was a truck yard. And the story doesn't end here, because in the next 6 months, the back office of HDFC Bank moves to 4 different office spaces. One of them was also an old mill. And now many of you might ask that, did HDFC Bank didn't had any money to spend even to rent an office space? And to answer this question, yes, HDFC Bank did had the money, but they chose not to spend it on the back office. But instead, they spent all their money on making their branch offices pretty, because branch office is the place which is visible to the customers, because that is where customers go to open accounts, borrow money or do any business with a bank. And for that reason, HDFC Bank made a huge sacrifice by not spending any money on the back office, but instead spent all that money on their branch offices to deliver customer satisfaction. Because many might think that when HDFC Bank became bigger, maybe at that point of a time they started focusing on customer satisfaction. But that is not the case, because HDFC Bank started focusing on customer satisfaction from day one. And HDFC Bank intentionally made it the top priority because customer satisfaction was the key strategy through which they wanted to establish in the Indian banking sector. Because at that time, the banking service provided by the public sector banks was very inefficient. Because a simple task like withdrawing cash or getting your passbook printed deposited would take hours or few days. And HDFC Bank identified this problem and effectively solved that problem without ever saying we are on lunch break or you have to stand in a long queue, etc., etc., which are by the way very common even today in public sector banks. And also another very big challenge HDFC Bank faced during the late 90s was that people were not trusting private banks with their money because of many scams that occurred during that period. And that is why they were not getting enough deposits and were not capable of offering lucrative offers to their borrowers. And that is when HDFC Bank started looking for ways to get bigger money into the bank, and very soon they spotted a way as well, which was actually in the form of a major problem. And that problem was in 1998, cooperative banks were restricted to do transactions only within their state boundaries. For example, let's say there is Mr. Jatin who is from Uttar Pradesh and there is Mr. Hari who is from Gujarat. And Mr. Jatin bought diamonds from Mr. Hari and he paid Mr. Hari in the form of a corporate check of rupees 1 crore. And now Mr. Hari carried that corporate check and returned to Gujarat and deposited the same check in his cooperative bank. And now Mr. Hari's bank will charge him processing fees, and also the bank will take 3 to 4 days of time period to clear his check, because the cooperative bank in Gujarat will first send this check to the partner bank in Uttar Pradesh, and once this partner bank in Uttar Pradesh verifies the check, only then the cooperative bank in Gujarat will clear this check. And obviously this is a very tedious process, and because of this tedious process, cooperative banks were losing on their big ticket clients, because people who did big transactions through checks avoided taking checks of cooperative banks because it would take 3 to 4 days to clear them. And this exact problem became a very big opportunity for HDFC Bank, because HDFC Bank went and partnered with these cooperative banks, agreed to clear their checks at their local branch instantly without any processing fees. And also as a part of this partnership, cooperative banks had to deposit a certain sum of funds in HDFC Bank as collateral. So now when Mr. Jatin will pay Mr. Hari through a cooperative check, Mr. Hari can directly deposit that check in any branch of HDFC Bank and get his money instantly. And this solved the problem of cooperative banks as well as the problem of HDFC Bank, because HDFC Bank got interest-free funds from these cooperative banks which they can use to give loans and earn money or earn interest on these loans. And along with this, HDFC Bank also played another ace card, or you might say a master stroke, which made more ways for the bank to receive deposits at a very lower interest rate. Because if you remember at the beginning of the video, we had discussed that banks earn money by giving out loans at higher interest rate and by taking in money or deposits at lower interest rates. And this master stroke of HDFC Bank also came in the form of a solution to a major problem. And the problem was in the 90s, employees used to get their salaries in the form of a check. And then employees used to deposit that check in their respective banks to get their money. And during the 90s, it is very obvious that most of the people had their bank accounts in public sector banks, because of which all those salary checks used to get deposited in the public sector banks. And all this money that was coming into the savings account of those banks was a low borrowing cost capital, because on savings account, bank pay lower interest rate, and banks gave out that same money in the form of loans and earned a higher interest rate. And private banks knew about it. And to get these salary checks deposited in their bank accounts, private banks also gave a lot of offers, but they all failed miserably to attract salaried employees to deposit their checks in these banks, because public didn't trust private sector banks. But HDFC Bank had a master plan to get majority of those salary checks deposited in their bank. So HDFC Bank designed a solution keeping in mind two factors. Factor number one was, no matter it was 1980s or 1990s or 2000s or any time, people always like convenience. And carrying a check to public sector bank, standing in the line for hours and then depositing that check to get their salary deposited was not so convenient. So HDFC Bank came up with a centralized system. And through this centralized system, HDFC Bank was capable of depositing employees' salary directly to their bank accounts, effectively eliminating the long process and tedious process and inconvenient process of carrying the check mostly to a public sector bank, standing in the queue for hours, and then getting the money deposited to their bank account. But HDFC Bank had a condition, and that condition was, in order to deposit employees' salary directly to their bank account, the employee and the employer both must have an account in the HDFC Bank. And at this point of a time, people didn't trust private sector banks, but still the offer made by HDFC Bank to deposit the salary directly to the bank account was very irresistible because it was so convenient. So people thought, why not? Let me open an account in HDFC Bank. I will directly get my salary into that account. But still, I don't trust a private sector bank. So I will withdraw all that money immediately as soon as it gets deposited to my bank account. In that way, I can enjoy the convenience and also my money will not be at risk in a private sector bank. And of course, during that time, this thinking was very common because nobody trusted private sector banks and everybody trusted only public sector banks. But the master plan of HDFC Bank already got it covered because according to the first parameter of the master plan, HDFC Bank offered convenience through which they wanted to lure customers into their bank. And once the customers are in HDFC Bank, comes the second parameter of the master plan designed by HDFC Bank, and this parameter was unmatched and uncompromised, highest priority and top-notch customer service and customer satisfaction. And now when people went from a public sector banking experience where they were asked to stand in long lines for hours, where they were told that lunch break is going on, come tomorrow, come day after tomorrow, and also in many cases the public sector bank employees were rude and didn't value their customers' time. And from that environment, when these customers went to HDFC Bank, they saw that bank employees were being nice to them. There were no long lines like in public sector banks, and HDFC Bank didn't had lunch breaks because they had people working in shifts who got the lunch break covered and the counter was open for service. And even if there was a slightest delay, the employees apologized to the customers, which was a gesture to show that they valued their customers' time. And this was a game changer for HDFC Bank because after experiencing such kind of a high quality top-notch customer service, nobody wanted to go back to the public sector banks. And HDFC Bank knew the value of customer service from day one. And that's why from day one they focused on customer service, and that's why during the initial days they made huge sacrifices where their back office was working from a truck yard and from old mill so that they could invest all that money to create a better customer experience at their branch office and deliver customer satisfaction. And now because of this great customer experience and service, the employees and the employer didn't wanted to go back to the public sector banks, because of which the money deposited by the employers and the money deposited by the employees in the form of salary checks started getting deposited in HDFC Bank. Slowly, the bank balance in the form of savings accounts, fixed deposit, and deposits in the current account started rising. And on all these deposits, HDFC was paying a lower interest rate, and HDFC Bank gave out the same money in the form of loans and started earning higher interest rate because now they had so many salaried accounts and they had developed a strong relationship with their customers. They had an approximate idea that when a person would need a home loan or a car loan or a personal loan, so they started pitching loan offers to these retail customers. So effectively, HDFC Bank was getting their deposits from retail customers, and majority of their loans were also being given to the retail customers itself, which actually created a huge capital safety net for HDFC Bank. Because in banking industry, corporate banking is considered to be more risky and retail banking is considered to be more safe. And if you want to understand why a retail bank is more safer than a corporate bank, then you can watch the video we had prepared on Yes Bank, where we have discussed this topic in detail and have also given a practical example to make it very simple to understand. And for your reference, I will leave the link of that video in the description. You can check it out from there. So in this manner, HDFC Bank created a conscious business strategy where they bypassed the trust factor of public sector banks by innovating banking solutions which lured customers to HDFC Bank, and after that they retained these customers with their top-notch customer service, which created high customer satisfaction, which in turn created a higher retention rate and transaction rate amongst the customers. And most of these customers were retail customers, which gave a solid foundation to HDFC Bank because the NPA or the non-performing asset of a retail-oriented bank is generally very low compared to a corporate-oriented bank. And because of HDFC's retail banking approach, HDFC Bank has an NPA of about 1.17, which is the lowest in the banking sector. And if you compare it with the second lowest NPA bank, then it is ICICI Bank, which has an NPA of about 3.19. And if you are wondering what is an NPA, in simple words, NPA is nothing but the percentage of the defaulted loans. Which means if HDFC Bank has given 100 rupees of loan, then out of that 1.17 rupees are the loans that are being defaulted by the borrowers. So now if we conclude the discussion we had so far, HDFC Bank is a kind of bank which has always been ahead of the time, because when everyone was thinking about checks, HDFC Bank introduced net banking. And even now HDFC Bank has the culture of innovating. For example, if you are an online shopper, then you might have noticed that on every e-commerce website, discounts on HDFC Bank's credit card and debit card will be the highest, and HDFC Bank is giving those bigger discounts on purpose because they know that online shopping is the way for people to overspend. And if they can manage to cater to the online shopping customers, then the chances of acquiring customers with big money and bigger consumption is much higher for HDFC Bank. So you might say that it's a long game played by HDFC Bank where they want to acquire those customers who spend more, because the customers who spend more sooner or later need loan services, and also the loan given to these customers are safe because these customers are skilled employees who work for good companies and also earn good salaries. And also related to this, we had made another video on credit card traps where we have elaborated this banking strategy in detail, where we have also explained how people get trapped in credit card debt and struggle for years to get out of it. And for your reference, I will leave the link of that video in the description. So that's it for today guys, and I hope today's video was informative. And if you think so, then please make sure to hit the like button and like the video. And also please subscribe to the channel, and most importantly, please don't forget to press the bell notification. So thank you so much for watching. I will see you in the next video. Until then, this is your friend Bharat Shankar signing off.